Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. Hello and welcome. You're with us on Bazaar Morning Call. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Surbhi Upadhyay, with me Rima Tendulkar and Manglam, and you can see the festive fervor is in its full glory. We are all set to celebrate. And guys, the good thing is that, after what's been a trying year, the market's not, giving us such a negative feeling after all. It's managing to hover around this 26,000 mark, and hopefully, portfolios start feeling better as well.
Resilient is the word, right? Yesterday, I think there was absolutely no trading action, very low on volatility, but we managed to hold on to those levels and not too far away from our all-time highs.
Not too far away from our all-time highs. The interesting part is that, every time the market's been beaten down around the 25,750, 25,800, it finds a reason to bounce back. And over the last three trading sessions itself, the market's seen, almost a 350, 400 point sort of rally from those lows. And importantly, even though nothing happened yesterday, a lot of the FII shorts, they started to cover their positions, perhaps close them. So the question is the Santa rally well and truly on?
Well, we'll find out. I think there's some evidence of that on Wall Street as well. And in general, like I said, there is a cheerful feeling out there. We are seeing at least a bit of green as well. So let's start from the beginning. What do we have? We have a positive close on Wall Street. Markets managed to chug along higher. There were essentially two data points or two pieces, of news that the market was reacting to. One obviously was this GDP print, which has been far stronger than expected, though the naysayers are saying that it's back-ended data. Anyway, the data was released late. This is third quarter US GDP. Released late because of the long shutdown. But for what it's worth, the number looked really good. 4.3%. The US economy growing at 4.3% in the third quarter. This was blowing past estimates, which were closer to the 3% handle. Now, this led to some volatility because initially there was a bit of worry in the market that if the economy is growing so strong, then will the US indeed cut rates next year or not? But over the course of the trading day, the market veered around to the view that indeed the Fed will go ahead and cut, and this is back-ended data. So those expectations of at least two rate cuts, the first starting June, they are still very much intact. And therefore, the market picked up by the end of the trading session. There was some volatility in the bond market as well, but at the end of it all, the 10-year yield was pretty much unchanged. We had levels of around 4.15 to 4.17. That was the rough trading band for the yield. The dollar, by the way, has continued to fall. And that's been the story on the dollar for the whole year. Yesterday was no different. It actually dipped below the 98 handle as well, and there is some additional weakness this morning on the dollar. The dollar is now at the weakest levels we've seen since the early part of October. So we're talking about nearly 3-month lows on the dollar. It's down about 1.5% for December. It's down almost 10%, the dollar index, for the year as a whole. And imagine with this kind of dollar weakness, despite this kind of dollar weakness, the rupee has gone on to do what it has. So that's on the currency front. By the way, the Nasdaq managed to climb back because the AI trade is still well and truly intact. And yesterday it was a good day for Nvidia, Broadcom. These stocks were up between 2 to 3%. So some buying at the lower levels continues to happen in the US tech space. Speaking of tech, the US has pushed back its deadline of imposing semiconductor tariffs on China. So very clear that they don't want to escalate anything right now, leave the door open for more negotiations. And the rate at which these tariffs will be applied, that rate will be announced 1 month in advance before the deadline. And the deadline right now is June of 26. So we'll see how that plays out. By the way, speaking of US news, we'll talk about this with our guests in more detail. Scott Bessent made some very interesting comments yesterday, and he seemed to suggest that the Fed could even have a relook at its inflation mandate. The 2% inflation mandate could maybe scale it down to 1.5%. Maybe could do away with the whole concept of the dot plot. So that was interesting, something that the market will note as well. Today, of course, the New York Stock Exchange closes early. It's Christmas Day, so 1 p.m. everybody goes home to celebrate. Likely to see thinner volumes in global markets as well, and for us over here. By the way, the Christmas sparkle is maybe over this week, but the gold and silver sparkle has continued for the better part of the last 6 months. And what rally and what momentum. Overnight, silver has surged 5%. And the level is now 72, if you're talking about silver futures. Gold has soared past 4,500. Absolutely no stopping what's happening in the precious metal space. So keep an eye out on that. For us, the Christmas cheer has ensured that the Nifty manages to hold its head above 26,100. Can the bulls prevail? That's the question. We're barely 150 points away from an all-time high. So let's see if that gets hit either today or by the time this week ends. But Mangalam, overall, not too bad. Feeling positive.
Feeling positive indeed, and it's in time for Christmas cheer, right? The question is from the FNO desk, is the Santa rally well and truly on, and is it ahead of us? Why do I say that? Because if you look at, the way a Christmas cake is baked, it's got three agents. It's got flour, it's got sugar, and it's got a rising agent. Let's talk about all of them. The markets did not much yesterday, but the Nifty, GIFT Nifty implies a 26-point open. The second point is that yesterday, while the Nifty ended flat, it's put behind a 3-day gaining momentum. And at the same time, despite the Nifty being flat, the open interest on both the Nifty as well as the Nifty Bank was down 3 and 6%. And that coincided with the FIs buying yet again in index futures for the third straight trading session. The FIs bought about 2,100 crores in index futures. And what did they do? They covered shorts. In fact, over the last 3 trading sessions, if you've noticed, the FIs have covered nearly 25,000 short contracts. So the rising agent, which was the increasing short position in the index, is now playing up. And as we see over the last 3 trading sessions, from 9%, the FI positions have moved to the 13% mark from on the long side, and that still has a lot of headroom to cover. And the net contracts also have come down by nearly 22,000. Now let's talk about the bigger ingredients, the flour as well as the sugar. The flour, the Nifty Bank, that's been doing extremely well. The RBI has gone ahead and announced a 2 lakh crore OMO to ease banking system liquidity as well. So that's positive from a Nifty Bank standpoint. And remember, the 20-day moving average on the Nifty Bank is an important mark to cross. And given the sort of up move that we're seeing today or expecting today, that may be a foregone conclusion. The second part is the sugar, the sweetener, and that has come in from the IT pack. The US has moved away from lottery-based H-1B allocation. Rima will obviously talk a lot more about that, but with that do a lot more to the IT index, which is already in momentum. It's up 6% in the last 1 month, but has been in a downtrend. So perfect up move position for the IT index. So the IT is doing well, banking sector doing well, and alongside that you have the rising agent is the Christmas cake, set for 26,325, the previous all-time high on the frontline index. And if yes, then maybe all the way up to 26,500 is where the bulls are positioning or fancying their chances, because the 26,500 call for 18 rupees a pop, people are taking a shot at that one. And the support has moved higher as well to around 26,100. That's the action that we see from the 26,200 put. So all ingredients are in place. The question is, when does the cake bake?
Hey, Mangalam, baking the perfect Christmas cake. You're making me hungry early up in the morning, Mangalam. My God, all that reference to cake, Rima.
Well, let's get on then with the equity calls for the day. Now, Gautam Dugar and Motilal Oswal Financial Services say that they have a positive outlook on the Indian equities and believe that the Indian markets are well poised to retrace the underperformance of calendar year 2025, supported by better earnings prospects, supportive domestic macros, and improved geopolitical situations. Valuations, particularly for large caps, they say, are not demanding, while earnings appear well poised to deliver mid-teens growth over FY26, FY27. Their large cap top picks are Bharti Airtel, ICICI Bank, SBI, Infosys, L&T amongst others, while the top mid-cap picks include Swiggy, Dixon, Suzlon, Jindal Steel and some more. Well, by the way, talking about domestic cues, yesterday the RBI made a very surprise and a very large liquidity move. So they announced 2 lakh crore of additional open market purchases, OMO bond purchases, plus $10 billion of a forex swap. Okay, we'll talk more about it, but this basically the RBI announcement could push the yields lower, which means borrowing costs come down, which is positive for credit and therefore positive for the equity sentiment as well. So that on the domestic front is the other big cue. But let's continue talking about the global macros, where we're headed from here into the year end. Mark Matthews, Bank Julius Baer & Co. is now with us on the show. Mark, thank you very much for joining in. Let's begin with how you expect the Santa Claus rally to play on. US markets have had 4 consecutive days of gains on the trot. More to go. What would be the year-end targets for next year, 2026, and the big bets?
I don't see why we won't get a Santa Claus rally. We usually do get one. And the news in the last 24 hours has been constructive. I was eavesdropping on your conversation. And for example, Treasury Secretary Scott Bessent talking about getting rid of the 2% inflation target. The GDP growth in the third quarter was announced at 4.3%. We haven't had that kind of growth in several years. And it seems like the AI/technology bull market is back on. So I think we can get a Santa Claus rally. And then moving into next year, the EPS growth forecast by the consensus for the S&P is around 14%. And the price-earnings ratio of the stock market is basically where it was at the beginning of this year. So I think it is possible we could have another good year. We're in a situation not unlike the late 1990s, which everybody remembers for the tremendous sell-off that followed it in 2000 and 2001. But we may be more like, say, around 1997 or 1998 than 2000. And if that's the case, then, you know, we certainly can increase more than we have already.
Mark, hi, season's greetings to you. And wow, I hope you're going to wind up the day early, get set and steady for all the festivities. Thank you so much for being with us this morning. So, you know, here in India, we've watched a lot of global markets rally on, especially markets in Asia, like South Korea, even Japan, Hong Kong, for that matter. We want to believe that 26 is going to be, in some ways, the year of India. That is a view that some in the market, for instance, Morgan Stanley shares that view. But what do you think?
I think so. I have to admit, I didn't think this year would be as pedestrian as it turned out to be for India. And I think in hindsight, obviously, you see things that you didn't see at the time, but I didn't see single-digit earnings growth for the NIFTY, and I didn't see the big FII selling. But those are in the rearview mirror, and going forward, I think that with all the interest rate cuts and cuts to taxes that we saw this year, and a reasonably low base, we can look forward to earnings growth next year. Our own forecast is between 16 to 18% for the NIFTY. And I think the FII selling should be completed. It was, in my opinion, to finance a reallocation to China after years of not being in China. Foreigners decided to go back to it this year. And the only emerging market they really owned in size was India, because you can't touch Russia. Brazil has some pretty strange politics. And all the other emerging markets are very small. So India was the natural place to take money out of to finance that China trade. So putting all of that together, and I think people looking now to diversify a little bit away from the mega cap technology trade, just in case for some reason it doesn't pan out. They're looking for other places to have some money. India, I think, is well positioned.
Right. You know, one of the things that did not do well for India this year was the lack of an option in the AI trade, which was doing extremely well back through the year. Now that the AI trade is coming undone, or people are realizing or bringing it back to reality, do you think that, you know, the erstwhile beaten up IT names in India, which were impacted by the AI trade, will perhaps come back?
Well, I actually think the AI thing has more to go. It might not be driven by the open AI ecosystem next year or Bitcoin, but I think it will continue. The sheer scale of investment that is going on in AI, I don't see it stopping, and I see increasingly corporate America bringing AI into its own architecture. And so demand for semiconductors and other hardware and software will still be very strong. Now, the Indian angle, I think, was the reason for the underperformance in the Indian IT space. Firstly, that a lot of what those companies do could be replaced by AI. And secondly, that they got caught up in the trade spat between India and the United States indirectly. And going forward, I think that nobody can predict the outcome with the trade relationship, but I suspect there will be some resolution to that next year, and that should help the IT space. And then whether all of those companies will be replaced by AI, I kind of doubt it. I think they'll find new things to do and new ways to participate in technology, even if it involves AI. So it is a sector that's derated, and I think it bottomed a few months ago, and definitely one to look forward to better days next year.
Very quickly, Mark, what's interesting is that US yields have been gradually kind of inching up, not too much, but I'm talking about the 10-year, the long end. And then these comments about we need to see who eventually heads the Fed, if the Fed is going to be far more lenient, if they do change that inflation mandate or not. What do you think of this and the way money may shift? Because a lot of money has gone into the precious metals market. So do you think some of this uncertainty will keep pushing gold and silver higher? But how much higher? I mean, look at what we've seen this year.
I would have had a temptation to start trimming on gold, but I said that a few months ago and I was wrong. It does look a parabolic, and typically when you look back at charts that go parabolic, they tend to roll over and go down very sharply. So my natural instinct is to be trimming on gold here, but even if it has a big retracement, ultimately I think the longer term direction is higher, because the real reason for the re-rating in the precious metals is that governments in developed economies do not seem to be able to write their budgets, and their deficits are very wide and show no sign of coming down. And so people rightly believe their currencies are less valuable. And there's no real light at the end of the tunnel for that. It's not just the United States, it's Europe, it's Japan. There's a long list of countries which are running deficits as a percent of GDP that are far above what the World Bank or IMF say is sort of reasonable rate. And the United States, for example, its deficit to GDP, the debt to GDP, excuse me, is 120%. That's twice as much as the IMF says is a prudent level.
All right, Mark, thank you very much for joining in, and season's greetings to you once again from the entire team of CNBC TV18. Thank you very much for speaking with us. But getting back to the big RBI announcement, it was a surprise, and it's a very strong liquidity. So basically yesterday, RBI announced 2 lakh crore of additional OMO bond purchases, which will be done in 4 tranches. Plus, they announced a $10 billion forex swaps. This comes on the back of the 5th of December post-policy measure, where RBI had already committed to 1 lakh crore of OMO purchases and a 5 billion forex swap. So if you take it together, these moves will inject nearly 3 lakh crore of liquidity into the system. And even the timing has come in as a bit of a surprise, because most participants were anticipating action maybe to come in only in January, but not just ahead of the holidays. Now, in terms of an impact, it's positive for bonds because yields could soften further. Lower yields means more liquidity, which should reduce borrowing costs, which supports credit growth, overall keeping the market sentiment also very constructive. So that is the other big headline coming out from overnight, which will impact the markets. But let's also tell our viewers all the interactions that we've lined up on the show today. So first up at 8:35, we've got the management of Sattvic Green Energy to discuss the 486 crore order win that they got for solar PV modules. 9 a.m. we'll discuss IT and the impact of the change in the H-1B selection process. Rakesh Kumar of BNP Paribas will join in. 9:20, Manish Sontalia of MK Investment Managers will be the market master for the day. 9:35, the management of Aadhar Housing Finance will join in to talk about their outlook going ahead. Towards the end of the show, we have a special discussion on the real estate sector. Vinod Rohira of K. Raheja Corp and Gulam Zia of Knight Frank India on how real estate is likely to shape up in 2026. Get into a break. On the other side, our list of top stocks is lined up. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a slightly positive start, and the Nifty is put behind itself. 3 days of gains, notwithstanding the jostle that we saw yesterday, but we still ended about 5 points higher. No real problem. So let's go straight to our list of top 10 stocks for the day. We do have our entire team, and Rima, obviously the big story overnight will be what came on the H-1B visa and the impact that it would have on the IT space.
Indeed. So US has announced a big change to the H-1B visa selection process. So they've moved away from a purely random lottery system towards a weighted system that prioritizes higher skills and higher wages. So earlier, all applicants, whether you're low-skilled, high-skilled, lower wages, higher wages, all had an equal probability of getting a visa, because it was random allocation and a lottery system. But because there were more number of applicants coming in from lower paid entry-level roles, they naturally secured a disproportionate share of visa. Now that is expected to change. Under the new proposed reform, the random lottery system will be replaced by a weighted selection mechanism. And based on the draft proposals, for instance, if you are at the highest level, it's called level 4, then you will be eligible for 4 entries. If you're level 3, which is, second highest, then 3 entries. While level 1, the entry one, will be allowed only 1, visa process. So basically, there is a higher probability of a higher skilled, higher wage, person getting the visa. So this could, bring down the selection odds for entry levels drastically and increase the chances for a level 4 applicants, which is what the US wants. This will take effect only from the 27th of February. It will start applying with the FY 2027 H-1B registration season, and it also aligns with Trump's broader reform push towards H-1B, where they want to tighten the program. They want to stop the entry level, reduce the dependence on entry level, bring in higher skilled people. And if you remember, it also ties in with the $100,000 cap fee on H-1B visa as an eligibility condition. It's overall a sentiment negative for IT, but we've been asking the IT companies on their dependence. It's not very high. They have been reducing their overall dependence on the visa, but sentimentally it's a negative. But does it come as a big surprise? No, because the draft proposal had come out in the month of September.
Right, Rima, take that point. Thanks a lot for that. But Coal India and SGS Enterprises on our radar. Sudarshan tells us why. Sudarshan.
Good morning, Mangalam. So Coal India, we can very soon see 4 other subsidiaries of Coal India listed on stock exchanges. Company had already begun the process to list 2 subsidiaries, BCCL and CMPDIL. Now it has given the in-principle approval. Basically, it has got in-principle approval from the board of Coal India to list other 2 subsidiaries, that is Mahanadi Coalfields, which is known by MCL, and other is Southeastern Coalfields, that is in Chhattisgarh. And these 2 subsidiaries together form almost more than 50% of the Coal India's coal production in FY25 and FY26. So the updates on December 16, Coal Ministry had asked Coal India to begin the process to list these 2 subsidiaries. On December 23, Coal India board has given the in-principle approval. So what's next? Now Coal India will submit to Coal Ministry, and after that the submission will be made to DIPAM, and following that all the regulatory approvals will be taken to list these 2 subsidiaries very soon, and we are expecting the listing to happen in FY27. SGS Enterprises, it has signed tech license cum supply agreement with BOE Veritronics, that is a Hong Kong company, and this agreement is for optical bonding and assembly of automotive display systems in India. So SGS Enterprises will assemble and optically bond automotive displays for 4-wheelers, while BOE Veritronics will supply components and support localization. So I'm going with green for both Coal India and SGS Enterprises.
Okay, so 2 green stocks, potentially green stocks on Sud's radar. Thanks for that, Sudarshan. Let's get to Ekta. She's watching out for a couple of pharma names. Ekta, which ones are these?
Morning. I'll start with Ajanta Pharma. They've signed an in-licensing agreement with Biocon for marketing of semaglutide in 26 countries. So the geographies will be across Africa, the Middle East and Central Asia. The patent, remember, expires in most of these countries in March of 2026. The company is planning to commercialize products after receiving those regulatory approvals in late 2026 or early 2027. MCure is in focus because they've received an establishment inspection report from the US FDA for the Gujarat facility, which is indicated as no action indicated. So that means that they've given a green signal for that facility. Zydus Life has partnered with a company for the commercial rights for a Nifemco, which is basically a biosimilar to Lucentis, which is the name of that particular biosimilar, which is used for eye conditions, emergency eye conditions. So you could possibly see Zydus in the green as well as the other stocks.
All right, let's move on then to the other stocks which are in the news. Ria joins in.
Well, good morning. Let's start off with Vikran Engineering. They have received an order worth roughly 2,035 crores from Onyx Renewables for a 600 megawatt solar power plant. The execution period for this order is 12 months. Now, the order largely entails the execution of the project on a turnkey EPC basis, but the scope of work also includes the supply of key components such as solar PV modules and inverters. Moving on to GPT Infra, this one will also be in focus on the back of an order win. They have received an order worth roughly 199 crores from Northeastern Railway for the construction of a bridge superstructure. The execution period for this is 730 days, and the total order inflow for the company, including L1 for FY26, is now 1,759 crores. Nibe Limited will also be in focus. The board has approved a fundraising of 250 odd crores via a preferential issue of equity shares and warrants, and this is being done at an issue price of 1,248 per security. And remember, yesterday the stock closed at roughly rupees 1,125 on the NSE. The last stock that will be in focus is Bellrise Industries on the back of block deals. BlackRock Global Investment Series has bought roughly 70 lakh shares of the company from Sumet Tools Private Limited at a price of 153.7 per share. And SBI Mutual Fund has also bought 5.1 crore shares of the company. And remember, yesterday the closing price was 168 for this one.
Take that point, Ria. Thanks a lot for that. So that's a bunch of stocks on our radar one needs to watch. In fact, the stocks with positive news flow: Coal India, SJS Enterprises, Ajanta Pharma, MCure, Zydus Life, Vikran Engineering, GPT Infra, NIBE and Bellrise Industries, while IT stocks are likely to open in the red. But as we speak about the equities, can't lose sight of what's taking place in the commodities and currency space, gold in particular, and dollar index weakness. Manisha, as always, joins in. Good morning, Manisha.
Morning, and thank you for that. I'll start with the precious metals first, and the overall sparkle really seems to be coming in from this one. Silver is now trading nearly 150% higher in this year, and we've crossed above $72 an ounce as well. So very strong gains continuing as we see the silver ETFs do well. The physical buying is still in the premium when it comes to the U.S. markets, and that seems to be adding to the over there. Take a look at the gold prices, and 4,500 got taken yesterday in the New York session. We're actually seeing an all-time high of $45, $25 an ounce for gold as well. And with these kind of gains, of course, it's been about portfolio diversification. It also is about central bank buying, which has been on the higher side, and the dollar index decline aiding this. But it's not just about gold and silver. Platinum is trading at an all-time high. We've seen 160% of gains in this year for platinum as well. As the demand for this one continues and the inventories have been on the lower side, platinum also is in the deficit for a third straight year. And then it's about copper, not too far away from its all-time highs. Remember, we have seen an all-time high in copper in the previous week itself. So we have seen further surge coming into the markets, inches away from creating yet another all-time high for copper as well. So precious metals, base metals continue to trade very firm, even as we are inches away from holidays and the year ending.
Okay. All right, Manisha, thank you very much for that. Indeed, no stopping the metals rally, especially precious metals out there. Thanks for a quick roundup. We'll take a break on that and we'll come back on the other side. The management of Satvik Green Energy will join in to talk about their recent order win. It was almost a 500 crore rupee order, the supply of solar PV modules.
Welcome back. We told you about the stocks which are likely to be in focus today on the back of news. Now let's tell you the stocks which brokerages are betting on. Sudarshan joins in with the brokerage calls of the day.
Good morning, Nima. So recently, if you would have visited any stores for the shopping, you obviously would have used Pine Lab platform to make the payment. Now there is another day, another positive note for Pine Labs. And today, Jefferies has come out with a note. It has initiated coverage with a buy call and target here is rupees 300 per share. That implies an upside of almost 30% from the current level of around rupees 233 to 234. What did it say? It says company is a leading digital payments at stores as well as in the prepaid cards, and it's building a share in online payments and international issuing business, and its network with brands, merchants and banks with tech platforms, and that is the key moat as far as Pine Labs is concerned. It can achieve 23% CAGR in revenue over FY25-28, and operating efficiency can lift adjusted margin from 15% to 27% by FY28. Now from Pine Labs to marine company, that's Knowledge Marine. Nuvama has initiated coverage with a buy call, and here target is 2,500 rupees per share and almost 50% from current levels. It says maritime industry is at an inflection point and company enjoys 50% order rate amid scarce competition and high entry barriers. It delivers superior 35 to 40% margin and is diversified across the spectrum. And November 2025 order book that is up almost 2 times year on year with orders from major ports that company has received. It's baking in FY25-28 revenue, EBITDA and profit CAGR of 58%, 62% and 71% respectively.
Okay, all right. Thanks very much for that. So we are going to keep all of those stocks on our radar. By the way, now let's take a look at some of the key movers yesterday. Big volumes, interesting price action. As always, we've got Hormaz joining in. Let's see what he's picked up on his radar. Hormaz, morning.
Morning, Surabhi. And railway stocks, we've spoken about them quite a bit all through 2023, a lot of 2024 as well, but forgotten after the downfall that they had after peaking out then. But yesterday, the stocks were up for the third straight day and very significant price volume activity in all of those names. Jupiter Wagons, of course, had its own news flow, but Ircon, Railtel, RVNL, IRFC, all of them ended off the day's high, but still saw significant gains anywhere between 3 to 5%. And take a look at the volumes as well. 13.5 crore shares traded on Jupiter Wagons, almost 6 crore shares traded on Ircon, over 1 crore shares traded on Railtel, and significantly higher compared to their 20-day average, which is anywhere between 10 lakh to 40 lakh shares. But the delivery volumes here are equally disappointing. We spoke about Jupiter Wagons yesterday as well, where only 6% of the shares were marked for delivery. Even in yesterday's session, despite volumes being 2x of Monday's trade, the delivery volumes were still lower. Only 77 lakh shares marked for delivery, only 50 lakh shares marked for Ircon, and only 12 lakh shares marked for Railtel. So delivery volumes ranging anywhere between 7 to 10%, no significant up move there despite the increase in trading volumes. Now Prism Johnson was once other mover yesterday, the biggest single day gain that the stock saw since September of last year. It closed above the mark of 150 for the first time after end of October, so almost in 2 months. Now Tuesday's volumes were the highest in 3 months, close to 1.5 crore shares were traded, 20-day average of just 1.5 lakh. And out of those 1.5 crore shares, 12 lakh shares were marked for delivery compared to 20-day average of just 68,000 shares. Now, despite that up move yesterday, the stock is still down 10% for the year. And lastly, NMDC. Metal stocks continue to do well. Stock ended at a 52-week high yesterday. Tuesday's volumes were the highest since December of last year. So 12 months were the highest volumes, close to 8 crore shares traded, 20-day average of 1.5 crore shares. And out of those 8 crore shares, over 3 crore shares were marked for delivery, 20-day average of less than 70 lakh shares. It's turning out to be the 4th positive year for NMDC out of the last 5. The stock is up 25% on a year-to-date basis.
All right, Hormaz, thanks a lot for that. So that's about a bunch of stocks which have delivery stats backing them. Let's focus on Satwik Green Energy now. The company is in focus for a couple of news pieces. They've received orders worth about 400 crore rupees from independent power producers and supply of solar PV modules. Alongside that, one of their plants also, the 2 gigawatt in-house EPE film manufacturing facility has been commissioned. So all of these, we have the management joining us right now, and we'll talk about 3 main points with them. Obviously, the order win run rate, the domestic solar module demand trends, ordering trends, and finally, the ideal top-line mix that the company would be aiming for between solar modules and inverters. We have Mr. Mathur, who joins in with all those details. Prashant, thanks a lot for joining in. Season's greetings to you, your family, your team as well. Let's start with the order inflow. Post the second quarter, in the third quarter so far, What have been the quantum of orders that you've received? And if you can split that up between modules and all the other segments?
Good morning, and thank you for inviting me on the show. So third quarter is normally a busier quarter than the first half of the year. So we are witnessing the same in the third quarter. So we have, if you would have seen, we have significantly increased our order book to 4.68 gigawatt. We have executed a lot of orders out of it in this quarter and added also new orders. So we will be declaring our order book when we declare our results, and I'll be back on your show.
Could you give us a rough range of where it is? Because 4.68 was at the end of September, and the third quarter, like you said, is busier than even the first half of this year. We've seen, some of the order wins that have been announced to the exchanges, roughly 400, 500 crores in the last 2 days. In this quarter so far, what's the quantum of order wins that you've gotten?
This quarter will be showing a good jump in our order book, is what I can tell you right now.
Okay, and you're still on track for 80% plus top line growth for FY26, right?
Yes.
Any disruptions in Q3? Because Q3, Q4 is typically a stronger quarter, but last time around there were weather-related and GST cuts, etc. So Q3, any disruptions?
No disruption so far. Obviously, the fog situation is there in North India, but Q3 looks much better, and we will be declaring our results soon. And this quarter is doing well. That's what I can say.
Okay, so 80-90% top line growth intact for FY26, and margins around 16% also holds.
Let's see. It's difficult to give a forward-looking statement. Sorry, but as we had said earlier as well, we will continue to grow with a CAGR of 88% is what we have grown so far in last few years, and we continue to grow this year as well.
Okay, how are the pricing trends in the domestic market? Because a lot of large players have entered. On the back of that, the per unit pricing, is it under pressure? What would it stand at now versus maybe 1 year ago?
Yeah, so pricing, this industry, the pricing goes up and down because this is the inherent, part of this industry. And so the prices have gone down because one is the GST impact as well. So the project pricing has gone down by almost 7-8%, which is actually good. If you see the first 8 months number, which has recently been published till November, India has done about 27 gigawatt of AC capacity, which if you extrapolate to DC capacity is almost 37 gigawatt has already been done in 8 months. So and last quarter, and now we are going to witness actually a bigger chunk of the business is done in the last quarter. So I'm very hopeful that this year we are going to grow significantly. The market looks like almost over 50 gigawatt of installation will happen, which compared to last year is a significant growth. And this reflects in our books as well. And overall the market is growing at a good pace.
Right. Let's talk about a couple of other things now. Importantly, one is your revenue mix, and the second is capacity for you and in the industry at large as well. Currently, what's your revenue mix between modules and other segments, and where does this mix move?
So module still holds a large part of our business. Apart from that, EPC is there, pump business is there, and inverter business has recently started. And pump also incubated last year, and is a business unit this year onwards. So all of this gives us about 5 to 7% of our revenue so far beyond the modules. But we are growing into these segments, and you will see that this will quickly become almost about 15% of our top line.
All
And
right.
by when? By when will the non-solar modules contribution increase to 15% from current 5-7%, which is your pumps, inverters, etc.?
We are targeting from next year onwards.
So FY27. Got that.
And on the capacity, the EPE plant that got commissioned, how much more margin accretive is that? Because I suppose that is a little more backward integration than revenue scale, right?
Yes. So, we are working on securing our supply chain. We are working on backward integration, cell, and further into ingot and wafer manufacturing. And EP is also part of that initiative. It's a strategic move wherein we get control on. So this is only 2 gigawatt as of now. Our current manufacturing capacity is 4.8 gigawatt, and we are expanding now in Odisha, so will be about 8.8 gigawatt of module. So 2 gigawatt from next year will be about 25% over capacity, which gives us security on our supply chain, control on our quality, and we can quickly, as the business grows and we are more confident on EPE, we will rapidly increase our capacities on EPE manufacturing as well. But this is a strategic move, and also since EPE was mainly imported, there was not much of EPE capacity in India. It gives us better control also on our cost and also on the quality.
Got that. Take that point. Thank you so much for joining in and explaining the business up to us. You are on track for 80% growth this year. Let's see whether that continues over the next couple of years or not as well. But you do say that capacity is intact for you to, or the capex plan is intact for you to continue that growth path as well. We take a short break, come back on the other side. Devin Choksi of DR Choksi FinServ joins in. Stay with us.
Welcome back. We've got Devin Choksi joining in, so let's get a couple of fundamental ideas going. Devin, good morning. Good to have you in. And season's greetings to you and your team. I want to start with financials because that's where a lot of the headlines are coming. On one hand, just, earlier this week, there was good news coming in from Shriram Finance. Yesterday, volatility and all kinds of, news flow around Chola. Chola Investment, the company's come out and denied everything. The stock recovered. But what's your sense? And what would your advice be on Chola now?
Yes, Good morning and season greeting to you as well. I think we have learned from the past that I think the kind of motives that these people have, I think, behind producing such kind of reports which have been proved malafide. I think the best thing that one should do is, I think, ask the company. And if the company denies it, then probably, I think, ignore such kind of report. That's what you do. Whether afresh, I think one should take a position in Chola or not, I think it all depends on, I think, how you see the overall environment. As we see, I think the environment remains, I think, pretty conducive for most of the NBFC companies in particular. And that's where we believe that some of the larger ones that are having the consumer leg attached to it, I think are going to be the winners in this game. Shriram, of course, I think is a different story from which you mentioned, largely also because of the fact that I think this particular deal in itself is giving them a balance sheet power, which possibly, I think, would give them the larger amount of footprint into the sector in which they are operating, along with some of the Japanese companies I think, with whom they have basically affiliations. So in my viewpoint, I think the overall, the basket looks, I think, quite conducive. The likes of Bajaj Finance, likes of Shriram, they look quite convincing to us, I think, from the investment perspective.
So you would still go ahead and say fresh purchases can be made despite the rally. And most of these names, Chola, Bajaj, Shriram, everything's rallied between 40 to 50% this year.
That's right. I think there is an opportunity as I see it because the consumer demand is picking up. Discretionary, non-discretionary both are, I think, on the rise. And we see this particular trend continuing for next many quarters. And that's where probably I think we'd like to consider with the companies which are attached to the consumer demand segment, which are these companies. Probably I think they are the better off in this entire aspect.
Right. What are your thoughts on the cement space, Devin? Because, post-monsoon construction activity typically picks up in the third and the fourth quarter. Now with, there is news backing with corporate restructuring taking place in a couple of the larger players as well. Is there any particular stock that you like, and what are your thoughts on the space at large?
Yeah, Mangalam, I think we have been maintaining some of the larger companies with a pan-India footprint, likes of Ultratech or likes of Adani Cements, where ACC and Ambuja combined along with now the Orient as well. So I believe that I think these are the companies which are likely to be the winners. ACC Ambuja, that is Ambuja Cement now, I think is basically appearing to be, I think, much better placed, largely because of, I think, their east-west corridor connectivity through the ports. And that's where probably I think we believe that they're likely to remain winners. Not too sure immediately whether I think the cement prices will go up in a hurry, but I believe that the demand scenario definitely remains, I think, quite upbeat and buoyant. So yes, I think at least for buying them into the portfolio, maybe around 15 to 20% upside can be ruled out in a span of around 12 to 15 months from now.
Okay. Devin, on the whole IT pack, what's the sense? The thing is that there is usually a lot of news and noise, and it's fraught with all kinds of regulatory risks. And this new H1B system, which is not going to be based on lottery, do you think it'll have any meaningful implication for Indian IT services, large stocks?
Honestly, I think we haven't examined, I think, that viewpoint, whether it will have any adverse impact, particularly on the large stocks, etc. But we believe that in general, the IT space looks, I think, quite compelling now. They've adapted in their backend the entire AI way of coding. That is the first important point. The other side, I think the customer segment, I think, is raising the new orders largely, I think, because of the AI-led disruptions which have started happening. And some of the companies like TCS, Infosys have been creating a separate kind of a module wherein they're creating the application for user industry. So in my viewpoint, I think they're looking relatively safer and better as compared to what they were before. So I agree that immediately, I think we are not seeing a very sharp rise in the order intake or at the same time, I think execution. So maybe I think if one is comfortable, I think between a higher single digit to the mid double digit, I think that kind of a growth is distinctly possible in the revenue stream of many of these companies. So keep an eye on that. Yes, I think the larger ones like Infosys and TCS looks relatively better placed today, given the valuation at which they are putting.
Right. And what would your thoughts on the auto space be, Devin? Because, that's been one shining sector this year in an otherwise underperforming market. Yesterday as well, we had names like Ashok Leyland and Eicher Motors, big names, all of them hitting fresh highs.
Yes, I think leave aside, I think passenger vehicle, because passenger vehicle, you might see company to company some kind of an ups and downs, I think, in a given quarter. But commercial vehicle segment looks, I think, pretty set for a higher level of growth. On one hand, infrastructure-led push is happening in the economy. The freight corridors are emerging faster. At the same time, I think the industry expansions and the logistics-related activity, they are demanding higher amount of commercial vehicles. So certainly the likes of Tata Motor commercial vehicle, or for that matter, Ashok Leyland, which you mentioned, I believe are the ones, I think, which are looking relatively more safer bet at this point of time. And yes, I think the downside remains comparatively less at this point of time. So we remain bullish on this particular space.
Devin, so, okay, actually, let's take a break. We'll try and come back and we can give you this time to think. We keep asking you about so many stocks, but I think we want Devin's one or two stock ideas for 2026. We'll discuss that after the break. Take that break, come out, and we'll have Kumar Rakesh of BNP Paribas also joining in. We'll talk about the IT sector and the implications of these new H-1B visa rules.
Welcome back. So we let Devin, think for a bit, and now he's back with us as we, count down to the opening of the market about 20 minutes from now, and 5 minutes from now will be the pre-open. We get a couple of ideas back in. Devin, a stock for 2026, what would that be according to you?
Mangalam, I think we believe that the power and power ancillary segment is likely to fetch higher amount of, I think, demand growth. And within that transmission and distribution segment, I think looks quite promising. Given the kind of a choice that we have, we probably, I think, would like to consider an Adani Energy from a perspective of looking at not only for next 12 months, but I think next 12 to 36 months as well. Because I think the kind of new capacities that they are catering to, adding into the portfolio for the transmission segment.
3M6 mission launch, carrying the Bluebird Block 2 communications satellite of US-based AST Space Mobile, marking a major milestone in India's commercial launch program. There she goes. That is the ISRO Bluebird Block 2 satellite which is launched.
सफलतापूर्ण उत्थापन द्वितीय प्रमोचन मंच से और अपनी उद्दिष्ट कक्षा की ओर बढ़ चला है LVM-3 M6 रॉकेट.
It's ISRO's heaviest ever launch.
6,100 kilograms. That's the weight of the communications satellite. And it's the heaviest payload to be placed into the low Earth orbit in the launch history. So quite an achievement, and it's zooming away.
Let's see whether the markets mirror that zooming up sort of
launch
move as well. Rocket launch. It's such a beautiful visual. You can just keep watching that and not go back to the markets. But let's go back. We have a job to do. Devin, you're still with us. You were speaking about Adani Energy. That could be your stock of 2026. And what, according to you, would be an underperformer in 2026?
Well, I think difficult to immediately pinpoint, but I think the larger space of mid-cap and small cap, which are valuing significantly higher compared to the growth that they are assuming, they could be the ones, I think, who could disappoint in this particular period. In my viewpoint, I think the mid-cap, small caps are required to have, if not a sharp price correction, I think definitely a time correction of a degree of around 12 to 18 months. Should that play out, I think in my viewpoint, this particular year, 26-27, should be the year dominated by the large caps. Mid-cap and small caps may have selective upside, I think, in some of the stocks, but otherwise, the large caps, I think, could possibly rule the next financial year, in my viewpoint.
Okay, all right, Devin, thank you so much. And, once again, season's greetings to you. Have a fabulous Christmas holiday, and, hope to see you again soon. Well, with that, let's turn our focus on to technicals. We've got Sudarshan Sukhani as well as Mitesh Thakkar joining in. As always, gentlemen, good morning. So the bulls have managed to prevail. It's not been an easy year, but in the last couple of days at least, maybe it's thinner volumes, whatever it is, lesser FPI selling. But, 26,100 has remained intact. So for today, at the index level, will you look at any fresh longs? Will you stay away? Or will you look at booking profits maybe? Sudarshan?
Yeah, good morning. No, I would stay long. See, we are going to see 5 or 7 days of very dull market activity. That's normal for the year end, but that doesn't change the short-term trend. So far as you said, that level is important. 26,100 is intact, and that also becomes your stop loss on a closing basis. Buy on dips, buy on consolidation. If you have positions, hold on to them. You may not see big gains because of that dull market activity, but you should be there in the market on the long side.
Okay, so remain long. That's Sudarshan's call. Mitesh, morning. What about you?
Good morning. Yeah, so I have a similar outlook. I think, very clearly the market is not showing any signs of weakness. And I did mention that, there'll be minor hiccup at about 26 to 20. And yesterday we got a high of around those levels. The next target which I have, which is, I've talked about, is the rising resistance line, which is at about 26,380, 400 zone. So I think we might head towards those levels, given the fact that with that last 3 weeks of consolidation, most of the overbought indicators have pulled off and are now showing signs of moving up again. So the first target, 26,380, 400, and then a breakout beyond that could give you another quick 300-400 point kind of a move. So the bias is clearly on the long side.
Clearly on the long side. Any stops that one needs to watch for?
On the stock side, I have today, a mix of buys and sells, more calls on the buying side because the directional bias is on the upside. So I have a buy on ITC with a stop at 403. Look for targets of around 415, 416 here. Also buy on HDFC AMC. After correction, this is trying to give a bounce back. So Buy on mild declines about 8-9 points around 2,700. Buy with a stop at 2,670 for targets of 2,765.
Right.
Then, sorry.
No, you're giving us stocks. I was actually asking also for stops on Nifty, the stop loss.
Oh, okay, sorry. I got it wrong.
No, it's absolutely fine. We were coming to you for stocks anyway.
So I just covered the Nifty first and then cover my balance 2 stocks. So on the Nifty, I think a trailing stop loss around 26,120 is what I recommended in the closing show yesterday. That remains, and on the upside, 26,380, 400 are the targets. And the balance 2 stocks, KFin Tech, that's a buy with a stop at 1,080 for 1140 as the target, and Axis Bank is the solitary sell call. Keep a stop at 1241. Look for targets of 1190.
Okay, all right, got that. Mitesh, Sudarshan, let's come to individual stock ideas with you as well.
Yeah. HDFC Bank is a buy with a stop under 982. Indian Hotels is a buying opportunity with a stop under 725. I have one intraday short, that's Cipla. Consider going short with a stop above 1525. And finally, my last buy is 361, which is a short-term buy. And also you could consider it as a positional buy with a stop under 1150.
Thank you, gentlemen, for joining in. We look forward to chatting with you through the course of the day. For now, let's turn our attention to the IT sector because the US has announced major changes to the H-1B visa program, the selection process. So the long-standing random lottery system has now been replaced with a weighted selection process, which will favor higher wages and higher skilled employees. To decode the impact on Indian IT and where the sector is headed, we have with us Kumar Rakesh, India analyst, auto and IT at BNP Paribas. Thank you very much for joining in. So first, let's begin. This change in the H-1B selection process that's been announced, what is the impact on Indian IT according to you? And which company is most adversely impacted and which one is completely insulated to your mind?
Good morning, Rima. So I think in the morning in your show, you were already speaking about that. The impact potentially will be very minimal. If you look at the exposure of Indian IT services companies' dependency on H-1B visa, it is now less than 1%, actually a few basis point exposure to H-1B visa. And if you check around, speak with any of the companies, industry experts, even the enterprise customers, they are very comfortable actually offshoring most of these work as well. And now incrementally what they are looking at, especially after the introduction of $100,000 visa fee, is call only those experts who are actually needed and for whom customers are willing to pay. And hence, in that regard, the change in selection process doesn't actually changes anything. Any which ways with that $100,000 fees, level 1 worker were not going to get H-1B visa or were going to be sent on site. It was going to be level 4 or really skilled employees who were going to be sent onshore. And hence this change in selection process, although it dramatically changes the entire selection process, the impact would not be material. So net actually for the entire industry, we do not expect much of the impact. There are strong contingencies available. Offshoring, which we already spoken about. There is increased local hiring as well. A lot of these companies have done since 2017, and that will also pick up pace in the coming year. And hence, using all these couple of levers, these companies should be able to largely mitigate. And hence, across the IT services companies in India, we do not see much of impact of this.
Is it less than 1% of the global workforce or the overall workforce is sent on H-1B visa as of now?
For Indian IT services companies,
yes,
as percentage of their total workforce.
Of their total workforce. Got that. Yeah.
Right. And no, so basically I wanted to know, because the impact is minimal and the IT stocks have momentum behind them and they have seen underperformance, do you think because of this, it could actually turn out to be a positive move?
This was largely already known a couple of months back itself. So from that perspective, it is not an incremental lever to drive the market. What is some of the recent macro data point which have started coming on. Last night, US GDP growth came out, which was pretty strong at 4.3% annualized rate. More importantly, within that, it was driven by consumer spending, which was up by about 3.5%. Now, US economy is heavily driven by consumption. Almost 70% of US GDP is domestic consumption. So if that is growing at 3.5% in September quarter, and since then, if you would see how the holiday season has gone through, it is indicating that holiday buying was up by about 4.2%. So this strong consumption in the US has continued. Inflation seems to getting under control, hovering around 2 to 3 percentage point on a YOY basis. And hopefully the Fed rate cut at some stage next year also continues to drive. Put all those things together, we would expect that the enterprise spending should start picking up next year, and hence the macro data point becomes a far bigger lever for the sector.
Do you think IT has bottomed out? Because from October, IT stocks have been doing well. At an index level, there's been a gain of more than 15%. Are investors, you speak to domestic, foreign investors, turning constructive on the Indian tech sector?
So at start of October, actually, it was, I think, 1st of October, we had come out with a report explaining that the relative underperformance of NIFTY IT in India compared to NASDAQ is at multi-decade low. We had seen through the year more than 30, almost 40% sort of underperformance relative to NASDAQ. We haven't seen that level of underperformance maybe during global financial crisis, internet bubble kind of era, but this was quite unique underperformance that the sector was starting to see. So from valuation perspective, from relative preference perspective, it started looking like it has reached a bottom. Since then, we have also been speaking about with investors that if you are incrementally getting worried about GenAI trade, it getting into bubble zone, within tech space, IT services is a good space to hedge against any GenAI concerns if investors are building. That investors have started reciprocating well. Within investors said, domestic institutional investors have already started turning positive on IT. In the last few weeks, we have started seeing global investors also starting to look at IT services in a more sanguine way. And hence the setup from valuation perspective, under position in the sector for both domestic and foreign institutional investors, all of that suggests that it is a good setup for the sector. Add to that favorable macro data, which we were talking about earlier, does indicate that sector should continue to outperform at least in the near term.
Okay. You said in October, which was the start of the rally for Indian tech, valuations looked attractive vis-a-vis its extent of underperformance versus NASDAQ. Now, part of that has been corrected. How do the valuations stack up today?
So if you look at most of the large caps, let's start there, relative to last 10-year median, a company like Infosys is still trading at last 10-year median. TCS would be trading at -1 standard deviation to that 10-year median. HCL Tech would be higher, but that's also because their free cash flow generation has dramatically improved and payout ratio has also improved. And hence, if you look at from dividend yield perspective, many of these companies are still trading at close to their highest ever dividend yield. So from valuation perspective, the sector continues to look quite attractive. It's not something which this outperformance over the last couple of months has corrected that entirely. We still think that the first leg of outperformance, which has partly already started, will continue to be driven by a valuation re-rating, not so much from earnings upgrade. Or the other way to say that, if the companies continue to deliver inline result, that is enough to deliver valuation re-rating.
All right, and your top picks in the sector would be from the large cap and the mid caps?
On the large caps, we like Infosys, first for their growth, but also their capability that they are building on the GenAI side in-house and strong partnerships that they have built. We like Infosys for that. Mid caps, we like Persistent Systems, strong execution, but more importantly, that is one company where we are already seeing benefits of GenAI reflecting in their revenue. There's already a decoupling between revenue growth and employee growth happening in that company. They have been using their platform, GenAI platform, which they have built very strongly, and that's reflecting in the numbers. And that gives us comfort on Persistent System. Despite the high valuation, the kind of earnings growth that company delivers, can potentially deliver, does justify those valuations.
And what did you make of TCS post its analyst meet?
TCS has been trying to diversify itself and capture a bigger chain of value within the GenAI space. Data center is one of the initiatives that they have taken, and multiple other actions they are also taking. This year has been an year of underperformance, but that's reflecting valuation. We like TCS as well, partly because of valuation, partly also we believe some of these measures that they are taking to recover their revenue growth should start fructifying from fiscal 27 onwards.
All right, Kumar, thank you so much for joining in and decoding the impact of what happened overnight, but more importantly, the IT space at large in your topics as well. Speaking about the sector, you believe that in the near term, there is some room for outperformance for this space as well. Will that continue today and in the very near future? Let's get across to Sudarshan and Mitesh once again for their 9-10 call. Sudarshan.
It's 361. Consider buying 361 with a stop under 1150.
And Mitesh, you?
I'll go with the buy on ITC for targets of 415.
All right, ITC and 361 Wealth are the two topics at 9-10. Sudarshan, our Sudarshan, joins in for the brokerage calls of the day, and we do have a couple of more initiating coverages. This one is on PhysicsWallah and LG Electronics, Sudarshan.
That's correct. So Goldman Sachs has initiated coverage on PhysicsWallah and has a neutral call with target price remains around the current market price, and it's around rupees 135 per share. It says it's one of the largest edtech platforms with the equal mix of revenue from both online and offline platforms, and it forecasts 24% FY25-30 revenue CAGR versus 38% that company has seen in the last 2 years. And pricing structure allows the company to penetrate deeper into multiple new categories, and the business model has a negative working capital cycle, and it forecasts 100% plus free cash flow to net income for company starting this fiscal, that is FY26. Another one, LG Electronics, Avendus Spark has initiated coverage with a reduced call, and target here is 1536 per share. It says its extensive reach remains a key strength and moat, and its third facility in pipeline to cater to South Indian market and the export segment. But company might face the competition, and that may lead to market share erosion and also impact revenue. And the challenges might mainly come in the super niche category and the premium category that company may face, mainly on the basis of the new entry that the segment is seeing.
Okay, thank you very much for that. Moving on to the other big story, Cholamandalam Investment has dismissed allegations by Cobra Post on irregular cash levels, suspected related party transactions and other issues which were flagged by Cobra Post. Listen in to what the management had to say.
The entire allegations are malicious and baseless, and they basically seem to be stated with some other motives in mind, right? Kind of clearly ulterior. From a financial health perspective, the company really wishes to reassure all of you that the performance of the company, its asset quality and its liquidity position continue to be very robust, as disclosed in the audited financial statements of the company for the half year ended September 2025. This collection process and amount has been subject to and continues to always be subject to internal and external scrutiny. And this is also covered, by our robust internal systems and subject to statutory audit. All KYC and income tax compliance for such collection is done in compliance with applicable legal requirements.
This 10,000 crore number seems to be over a stretch of years. During the earlier part of this period, certain companies need not be classified as related party as per the regulations by FY22 we started because the regulation also required, and we started including them. So that is they are playing on this regulatory requirement to say that it is not disclosed. This is the fact, and every point in time, as per the prevailing regulation, we have disclosed all the transactions with any institution we are dealing with.
Okay, that was Chola Investments. Chola Investments in the pre-open session is absolutely flat. Let's actually recap, the list of stocks, starting with IT. You should look at IT names on this whole H-1B visa overhaul. There's not much of red. It's actually just about 0.5% on most of these stocks. Infy is down about 0.4%, TCS about 0.1%, 0.2%. So not much on Indian IT. Now let's look at the other newsmakers, which were part of our top 10 list. So there's Coal India, which has a pretty flattish trend as of now. There's SGS, Enterprises, Ajanta Pharma, Not too much by way of these names. Just watch for Vikran Engineering, which won an order. That's the best performing stock from our top 10 list, suggesting a gain of almost 7-8% right now. Okay, let's start with the large caps then. 20 points higher, but then 8 points up. It's flashing. Not quite settled. Now 20 points lower, 18 points lower. So it's a little all over the place. Bit of a volatile start, you'd have to say. So let's see where the pressure is coming in from and what IT is doing. It is indeed IT, which is keeping the bulls in check this morning. HCL Tech about 0.7% lower. Wipro is down by about, again, 0.7%. Infi down by about 0.6%. TCS is down by about 0.3%. So cautious start for IT. What else is down? I can see Nestle towards the end of the Nifty tally. Sun Pharma is also marginally lower. Large banks like HDFC Bank and ICICI Bank flat to slightly negative right now. So you have a lot of red, you'd have to say. Look at that. Almost 3 lines of red on the heat map. On the green side, Coal India, the news that Sud spoke about, the fact that they're looking to bring more of their subsidiaries to the market, listings for many of them, including Southeastern Coalfields. That stock's up about 1.5%. Shriram Finance continues its forward march. Gains now touching 67-68% for the full year. Axis Bank is defying the weakness in some of the other large cap banks. That one's positive. There's a bit of a shine on Hindalco, but then the good news for the Nifty pretty much ends there. We have started and we're settling with about a 20 to 25 point cut on the large cap index. What about mid caps?
Caps are more resilient than the large caps, one has to say, and it's a lot of the commodities names which are doing a lot better. So we have Hindustan Copper, Hinzinc. Remember, it was a big rally that we saw in silver, $72 an ounce on silver as well. So Hinzinc benefits from that, up around 1.5%. We are seeing some traction, as Horma has pointed out, in a couple of these rail names as well. So IRFC, RVNL, both of them fairly well bid in trade. In particular, a stock that we don't often speak about, JD Cables, is one of the bigger gainers. It was up around 7-8% in pre-open as well, but now is higher. It's got an order worth around 244 crores. Then we do have Endurance, which is marginally lower on the cybersecurity incident that took place. United Spirits marginally lower, Patanjali Foods lower as well. And we do have Omax, which is up around 6% after seeing a 20% gain yesterday. So big volumes picking up on that counter. And Yatra Online, as we move towards the end of the year, all these holiday-related stocks start doing well. And Yatra Online is one of them, which is up around 5% too. So mid-caps now back in the green, a lot more resilient than, say, the frontline index, which too has been flitting between red and green.
Well, let's just get to some of these new age companies. So Pinevala is one where Jefferies initiated coverage, target price 300. It had a good listing. We'll just let the rate come in on that. Physicswala is the other one where Goldman Sachs has initiated coverage, but here they have a neutral call on Physicswala. Their target price is 135. And the other one from the new age companies is LG Electronics. Investec has initiated coverage with a reduce. Their target price is 1,536. We spoke to Sattvic Green, and that stock has opened up mildly in the green, 1.5% up. And in the mid-cap IT pack, Coforge continues to see some amount of selling pressure ahead of the board meet on Friday, where they will consider a fundraise. So H1B overhang aside, here there is that fundraise announcement on Friday. So there could be that dilution risk. So that's putting a bit of pressure. But other mid-cap IT too, mildly lower. Birla Soft Persistent down about 0.5%.
And I was watching that announcement from Coforge and I was wondering, they've chosen such an interesting date, right? 26 at 5:30 p.m. and people are just about getting into holiday, if not holiday, at least weekend mode. But
really no holiday for the board of Coforge.
No, clearly not. Okay. All right. Let's take the conversation forward. Manish Sonthalia is joining in. He's our market master of the day. Manish, thanks so much. You know, human beings are optimistic creatures by nature, and more so if you play in the capital markets. You have to believe that the coming year is going to be better, right? So we start right there. But beyond the, the well-placed optimism, if you really look at the facts on the ground, valuations, if you look at how India needs to compete with other markets, we're not, an isolated story. It is a connected world. Realistically speaking, do you think that this sluggishness of 25 will finally end as the year comes to a close?
Yeah, good morning, Surabhi. Yeah, I do believe that probably you would have seen the worst in calendar year 25, and more so on account of the Indian rupee, which has been falling relentlessly. 91 is overdone, according to me. And, even the earnings trajectory would seem better going forward. Of course, Q3, we are looking at something like 9% revenue growth and maybe slightly lesser than that on the PAT front. But come FY27, things should look better, more on account of government impetus, and earnings should be around 13-14%. Suffice it to say, valuations are not very expensive. Even Nifty 50 earnings less than 2 peg, even if you believe 11-12% sort of earnings growth, 21-22 times, not very expensive. More so on account of the fact that even the mid and the small caps, particularly the small cap space, is in line with 3-year median valuations, 5-year median valuation. So saying that that space is still frothy, I wouldn't believe so. And earnings trajectory out there is going to be again 14-15%. So macros are improving, valuations are okay, volatility index seem to suggest that neither the bears nor the bulls are in a hurry to sell or buy. There's total complacency, and all of that would mean that, you would have a big trigger either on the upside or on the downside. Markets would wait with bated breath for next 3 months on account of the trade deal to get signed. And so that's how I would believe that the positives weigh more than the negatives.
So Manish, fair enough. Fair amount of factors on both sides, positive and negative. And I want to leave FPIs out of the equation for a bit. We'll come back to the FPI question. Let's talk about domestic flows, right? And that's what supported the market. Now, again, we work with an assumption that the SIP flows, the mutual fund flows will remain steady, and they have been. Between 25,000 crores on the downside in a bit of a weak month to about 35,000 crores in a good month. Now, assuming that remains steady, what is the rest of the local money doing? The so-called local smart money, the family offices, the HNI, the UHNI. Is that money fully deployed? Is there some waiting on the sidelines that could then propel the market higher? Is it going overseas because global markets are doing better? And you have a lot of options coming up in GIFT now, right? GIFT City, to invest in overseas markets. So what is the so-called local smart money doing?
So the very recent fancy for the UHNI family offices is gold and silver. So that has really caught the frenzy, and because markets have been very, sort of.
But Manish, that's not smart, na? Then they're chasing the price, much like how you say that new investors or novice investors do, simply chasing returns.
Whatever it is, they are chasing bullion.
Okay.
That is my observation. The unlisted portion has lost some of its sheen. We saw unlisted shares fancy in the last 2 years, but since the listing, many have listed at a discount to what the unlisted prices were quoting at. That has lost a bit of its shine. And, so it's unlisted, it's basically new IPOs, listing gains and bullion, which is basically driving the market for the UHNIs and that segment. Of course, out here, I would believe that because interest rates in the system are very, very low, this permanent shift from debt to equity is a given. And in time intervals, you'll see the movement between different asset classes. Currently, it is basically favoring bullion.
All right, take that point. Meanwhile, just, our team was alerting us on VIP. There was a large trade on VIP Industries, around 26% equity that changed hands. My sense is that this would be an inter-promoter or a promoter-related, deal itself, because no one else holds that kind of equity. And it may be perhaps an intra-promoter transfer where, maybe DGP Securities would perhaps give it to the multiples private equity guys. So we'll monitor how this pans out. But as of now, the stock has been a rank underperformer below the deal at which, the business was sold as well. So right now, post this last trade, we've seen a bit of a spike.
You remember that price, Manglam, off the top of your head?
Off the top of my head, no.
Okay.
I just checked that around. It was closer to, I think, where we are right now. Okay. After this up move that we've seen.
388.
388 was the price.
Stock hasn't really kind of taken off even after the multiples.
So,
and the deal happened in July of 2025. So 6 months in, the stock is where it is. And this is after the up move today.
Yep. That's after the up move. So which is why, the belief that it was an underperformer before this up move, and now it's pretty close to where it was. 388 is where it is. Manish, the travel and tourism space, and also the luggage space in particular. There's VIP, there's Safari in the listed end of things. Safari is obviously crossed VIP in sales, market share, and market cap by a long distance. But right now, what we're seeing is this is ripe for disruption from other new age brands as well. There's Mokobara. There is, at the upper end, Ethos has brought about some of the luxury brands here. What do you make of this space and many such which are ripe for disruption?
So we own VIP. So yeah, very positive on this space. Mind you, the luggage industry is a duopoly.
Yeah.
To say, maximum market, or let's say three players, Samsonite, Safari and VIP. And the majority of the market share is basically by these three players. VIP got it wrong where they were late in moving to the online space, ceding market share to Safari. And Safari has really done well. Samsonite has been a laggard so far. They have today's news suggests that they are upping their capacity in Nasik by 7 lakh units per annum. But the luggage space is becoming very growth intensive. 6 lakh passengers traveling by air, around 1 million passengers traveling by road, 1 crore passengers traveling by train every day. And it's no longer just carrying luggage. It's more of a fashion statement. The Gen Z millennial will look at luggage also to be changed during time intervals, not the usual 10, 15 year. Now it is replaceable every 3 to 4 years. Now, having said that, 1.4 billion people in India have that recall value of VIP. Everybody understands VIP. So I think with the change in the management, their undoing of the previous strategies, following a consumer-centric, moving to online. Last quarter, they had a kitchen sinking quarter whereby they basically loaded all the expenses and the write-offs. That is why we saw the stock dip below 388, which was the open offer price. But at this market cap, and given the fact that it's only a matter of time when they could claw back their market share. And mind you, the unbranded guys, the D2C guys, this is a category which requires a lot of expenditure to build traction on top line. It's not a very easy category to penetrate. So yes, you may have newer brands come through to find top line, but it's a loss-making proposition for a very long period. So how many of them would survive really is the key. But on the whole, I think there is value in VIP, even at these levels, albeit Safari is doing very well in the current circumstances. They'll also do well. So quite positive on the luggage space as a whole.
Manish, what about Shriram Finance? 6th consecutive day of gains now, and the stock is trading well above the deal price of 840. Where does it go from here? Are you positive at this level?
Shriram Finance, the valuation difference between Chola and Shriram is quite big even now. I think we own Shriram Finance, and I think the cost of funds will come in lower because 40,000 crores worth of capital infusion will definitely reduce cost of capital, and their funding costs are going to come down. They'll apply for a rating upgrade, and they will have better leverage on the volume front. And the valuation difference between entrance players like Chola Mandalam seem to suggest that there's even more upside from the current.
So Manish, to sum it up, if I were to ask you your top 3 themes for 2026, what would they be?
So I would believe that discretionary consumption, and more so premium end of the discretionary consumption. And mind you, out here, one little insight is that brand salience today is getting diminished, except for 4 categories, which is basically automobiles, jewelry, real estate, and one more. So all these sectors would have salience on the brand salience, but others like consumer durables, etc., are losing their relevance on the brand sanctity. So out here, premium end is where we'll be focusing on. Capital market as a theme looks very, very entrenched even going into the next year. And rate sensitives as a whole, currently automobiles is leading from the front, but other rate sensitives like banks, insurance, real estate, they will also continue to do well.
Okay, so you're saying discretionary consumption, more the premium end, the rate sensitives and capital markets. So there's a fair amount of a financial mix out there.
No, I just wanted to know his thoughts on some of these new age players. We've had, Lenskart, Meesho, Physicswala, all these. There was an initiating coverage coming in on Nykaa the other day as well. Eternal, quick commerce, always in focus. So what's your thought on this entire space?
So I was fortunate enough to buy into, let's say, Pine Labs and Grow on the first day. These are very good companies, according to me. You could have technical factors of float adjustment in these initial days of listing, but I think the growth in grow is likely to be 35-40% for the next 2 years, according to me. A 2,000 crore net profit this year translating and going forward into the next year, maybe a 3,000 crore profit on the back of a 15% top line growth. Half of that coming from subscriber addition, half of them coming from ARPU increase. That should give us a massive operating leverage translating into 3,000 crores of PAT. And going into the next year, around 4,000 crores of PAT. So around 35-40% CAGR growth rate in profits with a very high very high ROEs. And mind you, the profit growth is going to get channelized into building businesses like distribution, margin trading, and all of that. So I think 26% market share in active trading accounts on BSE and NSE, and the turnovers are only going to grow over a period of time. These guys have an entrenched moat. The tech capabilities, because these are ex-Flipkart guys, they understand technology much better than the phygital brokers, and that would give them the UI UX interface advantage, ease of navigating through the apps. That stands as a competitive advantage. Pine Labs, again, is a play on upscaling of consumption. It's a payment aggregator, of course, straddling both online and offline, moving into international markets, and out here also is a growth parameter because margin expansion due to high operating leverage looks good. And, trading at a valuation discount to peers, Zaggle or Paytm, etc. So these are the two names that we own. Others, I don't find the valuations very lucrative, but some of these businesses are good, but valuation may be the only hindrance. Many more companies in the new age area is going to come for IPO in calendar 26. We'll keep a tab on them and evaluate.
Okay, so Pine Labs and Grow, two of the new age listings that have met the mark for Manish. Thanks for that. Manish, before we let you go, last 10 seconds on the conversation. Some of the poster child or the poster boy, poster girl sectors of the market, they seem to be under a cloud as we're closing this year, and EMS probably tops that list. There's a big debate on EMS now. Some feel that after a big correction, 25-30% correction, the stocks are again looking good. Some feel that maybe still overvalued and it's too closely linked to PLI and whether you have PLI or don't have PLI. Where do you stand in the great EMS debate?
So some of these players have run up quite a bit and probably discounting FY28, FY29 numbers. Currently, the apprehension is that rupee depreciation is going to hurt margins quite a bit. And that would be the key monitorable because these are low margin businesses. They have a lot of volume, visible volumes come through. That is not a problem. PLI is not a problem. Valuations are a problem on the back of margin concerns due to depreciation of the rupee because imported raw material as a portion of your bill of materials is still quite high. So from that perspective, valuations may go out of sync. So that is the apprehension.
So you're not buying the dips in EMS? Okay. All right, Manish, we'll wrap it up on that note. Thank you so much for joining in. Great conversation as always. Let's also take this opportunity of wishing you a very, very Merry Christmas, a very Happy New Year. May it be positive for you, your teams, your family in every way. Thank you for joining.
Very happy Christmas to you and CNBC and all your viewers, Surabhi.
Thank you. Thank you so much. Have a great day. Okay, speaking of a great day, one stock that's having a great day is definitely Coal India. Let's pull it up back on the screen. The rest of the market is actually, even the Nifty's turned around. It's flipped 50 points up now. So there's some buying happening at lower levels. And it's inching higher, 26,227, 228. So we're practically 100 points away from the all-time high milestone. 26,325 was the previous all-time high. I'm just about 100 points away from that. Let's look at Coal India, 2.5 up. Sud had alerted that, their whole plan of listing more of their subsidiaries, that seems to be rolling along. And Sudarshan, the market is taking note of that. So let's revisit the news.
So it's the top Nifty gainer for second straight day, and the reason on expectation of the listing that company is planning for its 4 subsidiaries in FY27. It had already begun the process to list 2 subsidiaries, and names are BCCL and CMP-DIL. Now the latest update is that Coal Ministry on 16th of December had asked Coal India to begin the process to list other 2 subsidiaries, and those are Southeast Coalfields and Mahanadi Coalfields. Both these companies are, one is is in Chhattisgarh and one is in Odisha. And remember, the listing of these two subsidiaries would be very important as these two companies together form more than 50% of Coal India's production. And because of the listing, it can be seen as the major value unlocking as far as the Coal India is concerned. Now, what will be the next process? So yesterday, the board has given in principle approval for the listing of these two subsidiaries. Now, Coal India will take this process to Coal Ministry, and after their submission will be made to DIPAM, and following that all the regulatory approvals will be needed for the listing. But the expectation is that all these four subsidiaries will be listed in the upcoming fiscal, that is FY27, and on the back of that we are seeing a big move in the stock for the last two trading sessions.
A big move indeed. Look at JBM Auto. That's another one which has moved higher, up around 9%. And VIP, something that we just spoke about, up around 8% post that block deal. It's crossed or closer to the 394 mark. What we understand is that the stake, obviously, which was held under the promoter's name, which was controlled by multiples. Now, maybe multiples wants that in their books, so which is why we saw that bit of a intra-promoter sort of transfer that took place. The street is taking note of the fact that the stock has done nothing. And with the new owners, can they breathe fresh life into VIP or not? Hindustan Copper, another one where we spoke about, the silver prices doing well and commodities doing well. Hind Zinc and Hindustan Copper, both of them have spiked. Hindustan Copper 5.5%, Hind Zinc around 3% as well. Nuvama Wealth is the other one. I think 361 was one of the calls that came in from Sudarshan Sukhani, and Nuvama Wealth is another one which is doing well, up around 3%. But Sud, you also have Pine Labs with you.
So it's another day, another positive brokerage note for Pine Labs. It's the recently listed company. Just last month this got listed. It was a strong listing for Pine Labs and stock has been moving higher. And today Jefferies has initiated coverage with a buy call, and target has given is of rupees 300 per share. Yesterday there was a positive note for Morgan Stanley, which had a target price of almost 260 per share. The stock is moving higher today as well. It's up currently more than 4%. Jefferies says company is a leading digital payments at stores as well as the prepaid cards, and building a share in the online payments as well as the international issuing business. Network with brands, merchants and banks with tech platform is the key mode for Pine Labs, and it can achieve 23% CAGR in revenue over FY25-28. Even operating efficiency can lift adjusted EBITDA margin from 15% to 27% that Jefferies believes that company can achieve over the next three fiscal, that is by FY28. And valuations are a discount to peers and can re-rate if company delivers the consistent growth that it has been seeing over the last few financial years.
All right, Sudarshan, thanks a lot for that. That's about Pine Labs, up around 4% right now. But the other stock on our radar, Aadhar Housing Finance. Next management on the show, stock surged more than 13% in 2025 so far. Expects strong AUM and disbursement growth as well. We're now joined by Rishi Anand, who's the MD and CEO of the company. Obviously, will the AUM cross 30,000 crore in FY26 with the third quarter disbursement trends and spreads with regards to their business, the net interest margin, will that expand or not? Would be some important points that we would be speaking with the management on. Thanks a lot for joining in. Rishi, season's greetings first to you, your team. If you could give us a sense on how the third quarter disbursements have been. When you joined us after your second quarter results, you said that the second half of this year could see 18% disbursement growth. Do you think that would happen? Are you on track?
Morning, Manglam. Morning to you, Surbi and Rima too. Yes, season greetings to all of you. Yes, I remember, speaking to all of you on our disbursement trends and H2 being much better than H1. Are we on track? If I were to answer that question, I would say yes, we are on track. And as always, I've been indicating that for the current financial year, we will be looking at an AUM growth of anywhere between 20 to 22%. So disbursements will translate to AUM, and we are completely on track.
What were the October, Rishi, hi, morning, Rima here. What were the October and November disbursements run rate? Because in H2, to get to that full year guidance of 18%, you need to do about 23, 24%. So at least for October, November, can you share the disbursements run rate?
While I can't give you the exact numbers, Rima, you understand why, and good morning to you. But are we on track upward of 20% on incremental disbursements? Yes, we are.
Okay, so incremental disbursements in excess of 20% from the start of Q3. What about the cost of funds? The RBI has delivered an incremental 25 basis points of rate cut in the December meeting. Have you passed on? What's been the extent that you've passed on so far? And what is your cost of fund as we speak now? And you'd spoken about an exit rate of 7.75, 7.8%. Is there going to be a change to that given the rate cuts?
Yes, Rimas. The way it works is for the calendar year in question, total of 125 basis points repo cut has happened. Now, if I look at the way our borrowing is tagged, close to about 20% of our total 18,000 crore borrowing is linked to repo rate. The balance is linked to MCLR. So have we got an impact on repo rate borrowing, which is 20% of my borrowing? Yes, we have. The balance is yet creeping in very slowly on the MCLR borrowings. As we move ahead, the moment we get substantial impact on the COF, that's when it's going to be passed on to the consumers. The way we look at it, by end of Q3 sometime, the pass on should happen to the consumer. As regards our cost of funds, incrementally, you are right. We are looking at closing the year at about 7.75%. As we stand today, we are at a 7.8% COF.
Hi, Rishi. Morning. Great to have you in. Season's greetings.
Morning, Survi. Season greetings to you too.
I have a very different question. I'll get to that in just a second. Let me just complete Rima's point on, just with the way margins and spreads will move. I think last time we spoke after Q2, you had indicated that a range of about 5.75 to 5.8% should be expected in this year, I believe, for spreads. Is that pretty much where you are at now?
So Survi, right now, as we speak, H1 exit has been at 5.9% spreads. I don't see too much of contraction happening. So a 7.75, 7.8% is the right number to go with.
Okay. All right. Got that. Now, Rishi, the thing is that I think Christmas came very early for the NBFC sector. And Santa is coming in from all directions, from Japan, from West Asia. Yeah. You know what I'm getting at, right? I mean, checks are being cut for $3 billion, $4 billion. So how are you viewing the landscape? And I don't think that you've spoken about this in the past, but because Indian NBFCs seem to be looking so attractive to these foreign investors, I mean, are you beginning to have some thoughts? And how do you view what's going on? It seems to be a great environment to raise fresh equity capital for Indian non-banks and banks.
That's right. And what better timing, Surbi? Yes, things are looking good. Whether it is Japan, whether it is Singapore, whether it is UK, we are seeing a herd of investors looking at interesting options within the NBFC space. As far as we are concerned, Surbi, I think we are kind of capitalized to the extent that for the next at least 2.5, 3 years, I don't think we are going to be needing any capital infusion. So are we looking at any capital infusion from the flux that is happening today? No. So it is already Christmas for us when we did our IPO.
Got
okay.
it.
So at your current capital adequacy levels, and I'm not now talking only FY26 end. I mean, what is the next because you're saying you're well capitalized for the next 3 years.
That's right.
So what is the next 3-year growth runway that you're working with right now? Will it be 15%, 20%? What do you have in mind?
So growth run rate, we are looking at anywhere between 20 to 22% for the next 3 years. So we'll keep that trajectory up and running, which means we will effectively double our AUM in the next 3.5 years. The way to look at our business is, what kind of levers are we sitting on? Debt to equity. That's how we measure ourselves. We are today comfortably sitting at about 2.55%. I think the capital requirement is going to be when we hit a 4.5, close to 5% lever. And that's 3.5, 4 years away.
Right. But, capital gets you the best value when you don't need it. That's when people are chasing you as against you chasing people. Let's see whether that happens or not if the check is tempting enough. But what I also wanted to understand is the underlying demand for housing by and large, because we, will view that from your lens right now. There has been both monetary, fiscal easing, the GST cuts, all of that has happened with people, having a little more money in their hands. Is that going towards consumption? Are we seeing any sort of increased demand for housing?
Okay, so Manglam, the way to look at it is, the moment GST cuts were announced, I think the entire industry pounced on, is something more being left in consumers' pocket. It doesn't work like this. It takes a couple of quarters for things to move on. More than GST cuts, we had income tax benefits flowing in this year.
Yeah.
We had PMAY 2.0 announced. So there are, and the larger piece was the Swami 2.0 fund announced, which was 10,000 crores. 3 crore additional housing coming under the affordable housing projects. So these are substantial things that are happening by both central and state government. The regulator NHB, the supervisor NHB, the regulator RBI are playing their own bit. So there is little too much happening both on supply and demand side, and I don't see any reason why things should slow down or there is no demand. Yes, we all as an industry became a little cautious when the tariff issues came around, primarily on three sectors. But it hardly, and as we look at it on hindsight, there was hardly any impact.
So demand's good. I'm not talking about demand slowing down. I'm more looking at demand accelerating.
That's right.
Has that happened?
I meant that. Even I meant that. And yes, the only difference yesterday we were at Lucknow. The entire housing finance fraternity was in Lucknow. Our supervisor NHB had organized a CEO's conference. And we happened to meet some of UP's secretaries at the housing department, and we could figure out the kind of development that is happening. 60,000 plus, affordable housing units up and running and available for grab by end users. Similar is the state in Uttarakhand. Similar is the state in Karnataka. Similar is the state in Andhra Pradesh, Telangana. So there is the demand, and we can see the demand coming in. These are actual end users who've taken the units, and they're looking for facilities now.
Got that. That explains why you're confident about a 22% growth runway for the next 3 years, which will double your AUM. Rishi, any pockets of stress seen in the industry in Q3? Because earlier there were regions in Kerala, East India, Calcutta, etc., where there was some stress. Not you in particular, but generally, how has the asset quality been? Are there any pockets of stress? And what is your guidance on gross NPAs for your company?
Okay, so I'll take the second question first, Rima. The guidance on GNPAs for the year as we end will be anywhere between 1.15% to 1.1%. That's what we've been delivering for the last 3 years, and I don't see any reason why the numbers should go up. We are stacking in perfectly okay. That also answers your first part of the question: is are we seeing any activities across multiple states which should be of any worry sign? No. The trend has been, if I were to pick up the last 5-year trend, whether it is, you spoke about East, you spoke about Kerala, the trends have been similar. The consumer behavior has been similar. The good part is that we've started getting a lot of legal support from the judiciary. That's what helps us a lot.
All right. And what about competition coming from the PSUs? Because while we're worried about money from other parts of the world coming in and that causing some sort of competition in the space, the PSU competitiveness has picked up as well. I mean, 2 or 3 of the HFCs did speak about it in their second quarter earnings too.
Yes, Mangalam, you're right. It depends on what kind of HFCs you're talking about. But the moment it comes to low-income housing, that's the sector I cater to. The good part is, everybody's created their own niche, whether it is public sector banks, private sector banks, larger HFCs, and people like us who operate in the low-income space. We do something called, non-income based lending, cash flow based lending. That's where I think we have a niche over, all the public sector banks or the larger private sector banks. Do public sector banks want to get into cash flow based lending? I don't think they're going to be getting there in a fizzy or a hurry. Do they still need these kind of consumers? Yes, they would need these kind of consumers on their books to comply with the priority sector norms. And that's the route that they take is something called direct assignment from people like us. So are we seeing any real competition from public sector banks? I will not term it as competition. I think it is all healthy. But there is definitely an overlap of 3-4%, but that's about it.
Okay, so it doesn't seem to be of a magnitude that is concerning you. As of now, you seem on track, sounding as confident as ever. 20% plus growth expected this year and maybe the next coming 2-3 years as well. Rishi, pleasure having you on the show today. Thank you so much for joining in. And once again, wish you a fabulous end to the year. Happy Christmas and a very, very happy 26.
Merry Christmas and Happy New Year to all of you and all your viewers, please.
Thank you. Thank you so much. Bye-bye. Have a great day. Bye-bye. Well, we'll take a quick break on that note. Coming up on the other side, we've been talking equities as of now. Need to look at the bond market as well because the RBI has announced a big bazooka move. OMOs worth 2 lakh crore rupees and a very, very large FX swap as well. What does this mean for the bond and the currency market? We'll ask Lakshmi Iyer for Bazaar Alternate Investment Management. Also with us will be Dhaval Dalal of Edelweiss AMC. Welcome back. You're putting the spotlight on the money markets now. The Reserve Bank of India has unveiled a fresh set of liquidity measures It has announced a 2 lakh crore rupee additional OMO bond purchases and a $10 billion USD INR foreign exchange swap line. We have with us Lakshmi Iyer, Group President, Investments and CEO at Bajaj Alternate Investment Management, and Dhaval Dalal, President and CIO, Fixed Income at Edelweiss AMC. Ladies and gentlemen, thank you so much for joining in. Season's greetings to both of you. So it seems that the news headlines are not abating, even though holiday season is setting in. Let's get your sense, because, I mean, while in the policy, the RBI did indicate, but I think in the policy, Lakshmi, they announced OMOs worth about 1 lakh crore. Yesterday, what we got is 2 lakh crores, and it's coming in bam, bam, bam. I mean, throughout, January. Is it because the market was getting tight? There's been a lot of talk about how there's a lot of supply, there's a lot of, state debt that's being sold in the market. Your first thoughts?
Yeah, hi, good morning, Surbhi. So definitely the bond markets were actually behaving like Ranveer Singh in Durandar. They were they actually behaved
rising
like
and rising, yeah?
No, they were actually living the moment ghayal hu, isliye ghatak hu. So I think,
Wow.
they were wounded and therefore they were behaving lethal, and enter Santa Claus, or should I say Mr. Sanjay Claus, where he just opens up the bag and hydrates the bond markets, which was so much needed, because two parts to it. To your question, the bond markets were rising relentlessly in terms of yields because there was an inherent demand and supply mismatch. Point number one. Point number two is even the durable liquidity in the system was getting a little bit challenging, and given that the CRR as a tool has already been invoked, there needed to be another primary infuser of liquidity, which is the OMO and the swap. And of course, it does have the intent of cooling off the yields, which almost, I would say, flirted with 6.7 levels as of yesterday. And then we saw cooling off. So I think it is much intended, cooling off required in an era of climate change. This is a much welcome move.
You're in some mood today. There's Durandar, there's Sanjay Claus, and then there's climate change cooling off. Let's see whether Dhaval also, resonates with that sentiment as well. Dhaval, with the kind of cool off that we've seen, a slight one, where do you see these levels settle and, maybe move from here on?
So obviously, Lakshmi's legendary comparison notwithstanding, I think the bond market has been a little soggy, if I may use the word. And it's like probably the probable uncle who's unhappy with the wedding. RBI pumping so much of liquidity in the last month. I think the bond yields continue to trend higher, presumably because the Reserve Bank of India did not announce any OMO for the January. And I think also the higher than expected SDL auction, I think that was these are the two triggers which pushed the bond yields higher in the first in Monday and Tuesday as well. So I think in response to that, the Reserve Bank of India has come out with a very big bazooka OMO bond purchase and a $10 billion swap. I believe that this should calm down some of the nerves in the bond market who has been asking for more and more. And I think this is a very, very good level of injection. I think from 1.5 trillion to additional 3 trillion. This should be sufficient, in my view, from the bond market's perspective to stabilize the bond yields and bring them lower to a fair value. I think in the last couple of months, we have seen the yield curve experiencing a little bit of bear flattening, where the short-term yields have trended higher, particularly 5 to 7 year segment has been the biggest hit, and while the long-term yields have actually trended lower. So I think some amount of respite is needed at the short end.
Sure. Both of you are on a roll, right?
Someone told me on the 24th at 9:50 you'd be discussing bonds, and suddenly someone spoke about Durandar, Uncle at the wedding, Santa Claus, and Ghatak, Ghayal.
So
all those things, I
think it's very, very colorful. Maybe I can add on. It's rubbing off on me as well. So that uncle, we'll call him Uncle Scrooge, Dhaval. So that's how the bond market was behaving, not getting into Christmas festive spirit. But then Sanjay Claus stepped in. I must apologize at the outset.
Grinch.
In case anyone from the RBI is watching, this isn't just, this isn't jest, it's holiday spirit. So please excuse us.
I think we should change it to Grinch, right? Because it's the Christmas season. So that is the really grouchy person.
But, just to complete that point, and, I leave it to either of you to take it up. So a couple of factors which were leading to these higher yields, right? The higher supply, the SDL auctions, like you mentioned. I want to understand to what extent was this unprecedented rupee fall and whatever little the RBI was doing to support. It wasn't doing much, but some sales were happening in the market. Did that also exacerbate the position? And during that time, there was some chatter about whether FPIs will start selling in the debt market as well. They're anyway selling in equity. So there was some fear around that. So where are we on the whole rupee front and the rupee bond tango then? Lakshmi, you want to take that?
Yeah, so Surbi, if you look at the month of December, the FPIs have actually net sold even in fixed income. Up until now, they've sold about 12,500 crores. Of course, for the entire year, we'll be closing in closer to about 56,000 odd crores, 1,000 crores positive. The rupee depreciation and the resultant intervention also exaggerated the liquidity deficit in the system. So as of this early start of the week, we were in a marginal deficit. And I think that's where the governor has played true to what he mentioned in the policy, that they will ensure that the liquidity in the system is not hampered. And with this announcement of the swap, INR swap, we are coming back into the region of plus minus that 1% of NDTL or net demand and time liabilities. Is it that the rupee depreciation is leading to a spike in yields? That's not clearly the establishment, but of course liquidity was definitely a challenge, and I think that has got addressed to.
Okay. Lakshmi, what would be the impact on the 10-year bond yield? Where does it settle, assuming there are no more shocks or surprises that come in, based on this announcement? And then even, say, over the next 3 months, FY26, the end of fiscal year 26?
So, Rima, our view is clear that this is a good and a very positive move, much intended to bring some cooling off on the yields. You could see yields receding towards the 6.5% region, but incrementally, will banks continue to support? See, they've been tendering in OMOs. Have they been really buying in auctions? I think all of that will set the narrative for it to decisively breach the 6.5 level on the lower side and stay there. So I think there are going to be multiple and our view is that this may not be the last of the measures. So I think bond yields are going to be in check, maybe closer to 6.45, 6.5 lower end, higher end of 6.65. I think the lid for the bond yields have been done for now, unless some other bazooka unfolds.
All right.
More measures are expected, according to Lakshmi, to keep the yields in check.
Let's see whether that happens or not. Dhaval, just a word on the correlation between the way the rupee weakened and the impact of the bond on that. Now we've seen the dollar weakness obviously come by over the last few sessions. So that's stabilized the rupee a little bit. Where does that go from here?
So our analysis shows that there is a correlation through the cash term rates. And what we have observed that during the swap days, first swap of $5 billion, we saw the cash term rates moving all the way up to 7.5% to 9% in some days. And as a result of that, we saw banks taking advantage of the higher cash term rates and try to issue bank CDs in a higher quantum in month of December. And that has resulted in slightly higher short-term rates. We also saw some redemptions in the system that all has contributed to some amount of selling from mutual funds in GSEC as well as in corporate bond market, and that has pushed rates higher at the short end. So these are the confluence of factors which has resulted in some amount of higher yield in corporate bond and GSEC. And now in January, Feb, March quarter, we have to see how much of the SDL supply comes in, because that's the one last bridge to cross as far as bond market is concerned. If SDL supply is lower than feared, then I'm sure that the 10-year will clearly go below 6.5.
Having
Finally-
by the way, a positive rub-off on many of the NBFCs. So
Oh,
if you
NBFC is doing very well.
Very well. If you look at the top two Nifty gainers, it's Bajaj Finance and Shriram Finance. And outside of that, you've got a Manappuram Finance, of course, aided by the record surge in gold prices. But in M&M Financial, also up and about, L&T Finance, Poonawalla, Sammaan Capital, Edelweiss Financial. Across the board, I think that is a sector which is leading today. And it's aided by the moves and the announcements seen by in the bond market by the RBI.
Absolutely. Who says there was no green in the Indian equity market? Just look at what happened to these financials and particularly in some of these NBFC stocks. What a move on them this year. And it's continuing as we wind up the year as well. Final question to both of you. So the other issue for the market, will the RBI cut or not cut? Are we done with rate cuts? Where do you stand on that? Outlook 2026, Lakshmi?
I'd say that the incremental scope of significant easing from here is not there. So we would probably push our luck and max maybe see one more rate cut. But beyond that looks very, very difficult. And timing, I don't think it's a slam dunk that we'll see it in Feb.
All right.
And Dhaval, quick 10 seconds, your call.
See, our view is that inflation is likely to surprise us on the lower side. So the RBI will have a room to cut, but whether they cut or not, it's immaterial. I think the 10-year will clearly go below 6/4 in 2026.
All right, gentlemen, take that call. As we speak, we're speaking about the festive season. A couple of stocks that, deserve mention. Sula has been, again, a rank underperformer. Sula has been down, 45% this year. A big cut from its post-IPO price as well. Currently seeing a gain of almost 7.5%, maybe the season of mulled wine this time. But the other one is VIP, as sources tell us that, the entire deal with multiples is complete right now. Remember, the deal was struck. Multiples was to buy 32% stake of the company at 188 rupees per share. The Piramal family has earlier transferred about 6% stake, and with today's 26% stake, 32% stake from the Piramals transferred to multiples, and that stock up around 5.5%, hasn't moved much from the price at which the deal was struck. But good time to get in a technical view on the market. Nagaraj Shetty of HDFC Securities joins us now. Nagaraj, your thoughts on the indices? We've recovered a fair bit from the lows. Where do we go from here?
Hi, good morning. Market has been a strong uptrend, no doubt about that, after a sharp up move recently, showing some sign of consolidation. Technically, this consolidation more often leads to a uptrend continuation pattern, and I'm believing that to true this time also. And market is likely to move further. At the higher levels, 26,300 to 400 is likely to offer some resistance for the market, and eventually Nifty could reach towards the 26,600, which is the initial near-term target for the market. Second, stocks, I have two stocks, one UPL and NMDC. UPL chartically was moving in a larger consolidation band and recently witnessed a decisive upside breakout of around 770, 780 levels, currently trading higher. Overall chart pattern is looking positive, and RSI and volume breakout is also seen on the charts. So currently trading around 780, one can look to buy at this point of time. Initial target would be around 820, and one can place a stop loss at 760. Second one is from a metal front, NMDC. NMDC was moving in a larger range-bound action over the last few months and before witnessing a sharp breakout in last two sessions. And the overall chart pattern is indicating the sharp upside momentum is on the way. The rise in volumes during breakout is indicating more upside could be there in the near term. Currently trading around 81.48, 81.50. One can look to buy at this point of time. Immediate target would be around 86. One can place a stop loss at 79.
Thank you very much for joining in. Let's talk about some stocks which are moving around smartly. Ajanta Pharma right on top, 4% gain. Ekta's here to tell us the news. Ekta.
Well, yes, Ajanta Pharma is in focus because there is an important deal which they have struck. They have signed an in-licensing agreement with Biocon. This is for marketing semaglutide, which is basically the generic molecule of Wegovy as well as Ozempic, which is the weight loss drug by Novo Nordisk and which is going off patent in multiple countries come next year. That includes Canada in January as well as emerging markets, including India, in March of 2026. So this particular licensing agreement is with Biocon for around 26 countries, and it is exclusively across most of them and semi-exclusively in 3 geographies. It is across Africa, the Middle East and Central Asia. Now, the patent, like I mentioned, expires in most of these markets in March of 2026. So Ajanta Pharma plans to commercialize the products after receiving regulatory approvals, which they expect in late 2026 or early 2027. Remember that many such companies are looking to do such deals. We are probably going to hear a lot more of it as the patent expiry does come closer. So for this, Ajanta Pharma has a strong presence within the geographies such as Africa. So for them, it would be easier to market a drug such as semaglutide more extensively.
Thank you very much for that. Get into a break. On the other side, Manisha Gupta will join in to focus on commodities. Stay tuned. Welcome back. As promised, let's talk commodities. Manisha is now joining in, and Manisha can't stop talking about the rise in gold and silver.
Well, absolutely can't. And that's exactly what gold and silver are ensuring as well, with all-time highs continuing on to this one. I'll start with silver first, and we've seen an all-time high of $72.7 an ounce for this one. Now, if you look at the overall this year gains, that stands at 151%. So it's more than doubled is how we look at the silver prices. I want to take you through on what we've done through the year in sense of gains here. So we started this year with $29.50 an ounce. It was somewhere in June that we saw $30 pass and go up to $37 as well. $40 crossed in September, and then you saw $50 cross in October. Well, this is the first time that $50 was hit since 2011, and $50 was an initial all-time high as well. $60 and $70 got done in the month of December itself, and we're not even done with the whole month right now. So from where we're standing right now, it has been a 40% of gain in case of silver prices in last 1 month itself. For the Indian prices, we've crossed above 2,20,000 rupees a kg right now, with strong support continuing from the ETF buying for the Indian markets, and the international markets have seen 4,000 tons of holdings for ETFs therein. It has to do with the strong industrial demand. The conservative demand continues to be there, the conventional that is. And then apart from that, you have the AIs and the data centers and EVs and green energy, and silver is getting used in all of that. And then this is about disruption in case of, or dislocation rather, in the international markets. So a lot of LME inventories have continued to decline because a lot of silver is getting shipped to US, and then ETF demand is, that is where silver is getting logged as well, weighing onto the prices there. Hedge funds were caught short, and we have seen them coming back into the markets as well. There is a deficit that continues because mine supply in last 10 years has declined around 80 million ounces. So 1 billion ounce of our supply is what we are looking at in this year. Apart from that, markets also believe that some bit of a crypto money also seems to be coming into the markets. Silver is part of the US critical mineral list as well. So everywhere that you look, there is no reason to go short. There could be some profit taking because people are holding silver, but no shorts absolutely coming in for this sector there. Not just silver, gold is trading at an all-time highs as well, $4,525 an ounce onto this one. And for this year, we are up by nearly 72% into the markets there. Take a look at the chart on how gold has performed in this year. We started this year with $2,950, 3,000 got taken off in the month of March, an all-time high of 3,500 in September. 4,000 is what we saw in October. Now, this is a string of all-time highs that gold also continued to do, and 45.25 is what we're looking at this point in time. So the last $500 of a jump up clearly came in the last 45 days itself. For gold also, this is the strongest annual gain since 1979. It has been 51 record highs that gold has done in this year. And then Indian gold prices have surpassed above 1,38,000 onto this one. A lot of geopolitical tensions because you have US, Venezuela, Iran, Israel, and that it also is about Russia, Ukraine. All of that have been quite supportive. It also has to do with a very strong central bank buying that we have seen, investment, institutional buying, portfolio diversification. All of that led to strong gains coming in for gold. And then the rate cut expectations going forward have been supportive. And finally, I want to talk about platinum prices, and they have outperformed gold and silver as well. $2,385 an ounce onto this one, and we've seen 163% of gains on for this one for this year. This chart should come in on your screens as well, and this is going to be very, very surprising because we started this year with sub $1,000 an ounce. So we were trading at around $910 in the month of January, and then we've seen $1,000 cross in May, 1,500 cross by September, and 2,385 of an all-time high standing in December. I mean, this is something you see perhaps in once in a lifetime, the kind of run-up that we've seen. 170% of gains come in. So tight supply conditions, strong investment demand, inventories continuing to decline. This is a third straight year of deficit as well. European Union demand is expected strong. Chinese platinum demand has been very, very strong. So if you look at the China platinum bar and coin purchases, that stands at 418,000 ounces. You know, interestingly, China has not bought any diamonds this year. They have bought gold, silver and platinum, and it clearly shows. And the launch of platinum futures in Shanghai Exchange is yet another thing. So people are buying it in physical, in futures, everywhere. So China clearly buying a lot of this, and so is India.
All right, when China buys, we see a big price move, and when India buys as well, we see a big price move. All the money from diamonds perhaps going into platinum, gold and silver. With all the financialization of these assets, a big move is what we're seeing. Thank you, Manisha, as always, for telling us what's taking place out there. Just monitor Grow. That stock has been doing extremely well. Just the last few minutes or so, it's seen a massive spike up around 7%. There have been a couple of brokerage initiations on this stock over the last two sessions. The one that came yesterday was actually a sell report that came in. So the stock obviously, is mildly off its post-listing high, but seen a big move in the last 7 days itself, up over 21%. 361 WAM as well, which was one of the technical calls at 10, has seen a bit of a spike. That stock's moved higher, and we continue to see some traction in a lot of these NBFCs, which continues from the word go. Manappuram Finance for now up around 5.5%. What we'll do is take a short break, come back on the other side. A special discussion on REITs with Vinod Rohira of K. Raheja Corp and Ghulam Zia of Knight Frank. Welcome back. Now, let's talk about the REIT space, because it was one of the most notable trends in 2025. The increased focus on real estate investment trusts, also known as REITs, or basically, making real estate investment acceptable or agreeable or palatable for small ticket sizes as well. India saw its 5th REIT list on the stock exchanges. The market cap now stands at around $18 billion. So to discuss this space and the landscape, joining us now, Vinod Rohira, MD and CEO at K. Raheja Corp. We'll also have Ghulam Zia join us shortly. Thanks a lot, Mr. Raheja, for joining in, Mr. Rohira for joining in. On the REIT space itself, 2025 has seen a lot of regulatory changes, some more expected in 2026. What else can be done for you to make, from your side and from the regulator side, for REITs to be a little more attractive?
Hi, thanks for having me on your show. Good morning, and wishing you a Merry Christmas in advance. So I look after in my role on the development part of the business, which is residential and commercial real estate. I can tell you that the markets finally are understanding the intrinsic value of the capital value behind the annuity of assets like grade A commercial real estate, and which is the reason why you're seeing the interest in REITs going up. And of course, SEBI has helped understand the investor that this is more of an equity instrument than just a debt instrument, and it's got a long-term value to it, and it's an intrinsic value-driven asset which is focused on dividend and total growth. So all of these aspects are now penetrating deeper, and you're seeing much larger interest in having a share in investing in commercial real estate. I think this is only going to keep going up because it's going to be far more stabler as an instrument, far more accepted as an instrument, and it'll do phenomenally well in the years to come.
So for K. Raheja Corp, between commercial, which is similar to REITs, the annuity kind of a business, versus the pure residential space, I mean, what is the current breakup? In 2025, what have been the kind of returns that you've generated from both these assets? And will you be shifting more towards commercial then?
I think we are set to blaze guns in all of these directions. We see a lot of potential for grade A plus commercial real estate. We see a lot of potential for the most aspiring, aspirational luxury in every market segment, and we want to really scale that up. You will see us announcing a lot of projects that are on the drawing board, getting started in the next few quarters. So we are very, very bullish on prime real estate for residential as well as commercial across all the prime markets in India. We've seen a great year, and I think 26 will even further be a strong endorsement to trust and brands that are delivering quality of a different level, you will see the consumer asking far more, and those who can stack up will actually do really well.
So what is the incremental addition seen in the industry this year in commercial versus residential?
I think the returns have been phenomenal in both cases. You've seen a huge demand from large institutions wanting to buy annuity assets, which was not the case up to 2 years ago. So any assets that coming out to sale, very few grade A plus assets are really available. And if they're available, they're being bidded at crazy prices because people want to acquire those assets which are already giving you annuity returns. So that you're seeing yield compressions take place, and you're seeing assets being appreciated if they are grade A plus plus. Similarly, if you see the consolidated space the commercial real estate has, the marketplace has very few reputed players who are developers and asset managers combined. And in that space, in grade A locations where you're building grade A plus plus, the demand is far outstripping supply. And that's really the advantage you see if you're really aggressively building, because the tenants you want to lease to are not happy with starter title. They don't want to see broken up assets. They want to see someone who they can call 24/7 to look after the experience and the asset. And if you have a combination of those going, you have a runway to be able to deliver quality assets and get the best tenants in. And we are seeing that runway play out in 25. You will see that play out in 26 as well. Similarly, for the residential play, the shift is towards quality, timely delivery, and a different level of experience you're offering. The consumer's changing, mind you. In the next 5-7 years, the seniors will start dictating what they want in their homes. You have to pre-plan those kind of assets and build them. And if you're right up there, you will see a massive demand surge because the client is willing to pay and wants a lifestyle.
All right, massive demand surge is what is expected from a consumer standpoint. But let's go back to the investment question. Ghulam Zia also with us right now. Ghulam, it's Christmas time. Everyone has their wish lists, right? So from a REITs investment standpoint, what would be on your wish list from the regulators for the next 1 year? What can make it a lot more attractive than what it is already?
Good morning, everybody. Good to be here sharing this space with Vinod. He is an expert on the subject. The point we have been wondering is, this market has to expand, with barely less than half a dozen of REITs. I would want to see this whole market expanding more. And that's where we wish to see at least 3-4 more REITs coming on the block, giving more options to investors to select from. And that's something which is actually in sync with where we stand as far as India is concerned. We have already crossed, as far as offices are concerned, more than 1 billion square feet of space is already with us, and we are going great guns. So this is high time we expand the portfolios, get more REITs out there, give more options. Obviously last year has given us a great investment opportunity for people. The growth has been fantastic. The returns have been outstanding. So we want to see it continuing and more options, more REITs to come on the block.
What is India's current penetration in terms of REIT in listing versus the globe? And what is the expected addition to REITs in the next 3 to 4 years, Ghulam? You speak to everyone in the industry. Where is the industry headed?
Well, the way we look at it, not even 20% of A-grade office stock is right now in the portfolio with REITs. So there's a huge runway. We have a huge opportunity ahead of us. So where we see it, even if it is only office market where it is doing exemplary performance, it's a great runway ahead of us. On the other side, whether it is retail or hospitality REITs are also coming up, and of course, warehousing also gets to be a part of infrastructure domain. So whether it is REITs or InvITs, I'm not too very clear, but then warehousing is also a huge domain. So as far as real estate connects are concerned directly, a lot of these options exist, and we do see in next 3 to 4 years, I would love to see at least half a dozen more REITs knocking coming around the block and giving more options for our investors to participate.
All right, we have 5 already, and you expect a half a dozen more to come by as well. Just a final question to Mr. Rohira. Mr. Rohira, you spoke about residential, you spoke about commercial. Let's speak about hospitality. That's another very attractive, opportunity for builders like yours.
Absolutely. So as a group, we are very clear on the drivers for growth. We see hospitality to grow tremendously in the right locations, and there's a separate team in Chalet that runs this, and they're constantly giving you feedback on what they see of the marketplace. As a group participant, I can tell you that there is a tremendous opportunity in hospitality, in retail, in prime residential as well as commercial. And there are other asset classes that are emerging which need scale, whether it's healthcare, whether it's education. All of these will play out dramatically in the coming 5 years, and you will see a lot of that deciding how value grows and how infrastructure plays out.
All right, gentlemen, thank you so much for joining in and giving us your perspective on real estate investments, the real estate trends, and the drivers for the growth of the sector. Let's see 2026 brings you the kind of returns in real estate stocks and real estate investment trusts as well as we speak. With that, out of time on this edition of Bazaar, we wrap up with the good news. The market is up almost 50 points for the Nifty. The Nifty Bank up around 125 points, with mid-caps far outpacing the frontline indices. The advances around 1700. Take a short break, come back. A team of chartbusters on the other side.